Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, today's trade can be, surmised as something which is called turbulent. Even though we've ended flat, but if you look at the broader end of the markets, we saw deep cuts coming in there today as well, with the small cap index shedding nearly 2% today as well. But we saw wild gyrations today, right? We opened around that 22,400 mark, but then we gave up that level, slipped into the red, but managed to end extremely flat as flat can be, with the Nifty ending somewhere around 22,335 or thereabouts. But the Nifty Bank index, Yatin, extreme volatility there. We saw a 900-point gyration during the course of the day, although we did end off day's low when it comes to the Nifty Bank index. But PSUs, they were also hammered out of shape today. So Nifty PSU Bank index was down 2 to 2.5%. In fact, even the realty pack, Yatin, today, that was beaten black and blue. Some 3%, 3.5% kind of cut coming in on the Nifty Realty Index. Aside of that, if you look at the breadth, it continues to be dismal as it was last week, all of last week. Today as well, NSE advanced decline ratio was almost 1:5.5. So that was really dismal, and you can see the pain in the broader markets. The mid-cap index also shedding 1.5% or thereabouts. PSU stocks, bore the brunt of sell-off today as well. So the likes of BEL, BHEL, SJVN, these were some of the PSU stocks that saw a fair bit of selling today. Among the sectoral gainers, it was the IT pack that stood out. And the Nifty Bank index, I think also towards the end of the session, managed to just about edge back into the green. Among the Nifty gainers, Yatin, HDFC Bank, bucked the trend today. Axis, Kotak, ICICI, all of them were under pressure, but HDFC Bank emerged as, the top Nifty gainer. There's been some buying with respect to mutual funds in the last month as well. In January, mutual funds were buying into HDFC Bank. Even in February, there was buying to the tune of 8,400 crore rupees in HDFC Bank. Aside of that, TCS, Maruti, Eicher Motors, Infosys, Airtel, Reliance Industries as well, they were among the gainers. On the losing end, Cipla, Grasim, SBI, Adani Ports, Bajaj Auto and Britannia. But Yatin, there were quite a few movers and shakers across the broader markets today, right? There were quite a few newsmakers as well. Take us through some of them.
So if you look at the market, obviously the breadth was quite weak. In fact, we had 300 advances for 2,000 declines in the market, clearly indicating the pain in the mid-cap index. Now, if you look at stocks like Swan Energy, they swing nearly 20% lower, top loser on the Nifty 500. So did, Patanjali, Godfrey Phillips, LK Equipments, all of these stocks showed a lot of weakness, 7 to 10% down each. However, bucking the trend, we had stocks like Balkrishna Industries, that stock gained 4%. Ingersoll Rand, Poonawalla, all of these stocks moved nearly 4% in trade. Obviously, if you look at the F&O stocks, we had stocks like India Mart, HDFC Bank, MGL, AB Capital, all of these stocks doing well, especially the likes of AB Capital and India Mart on the back of brokerage reports and news flows. Both of these stocks were quite active in the F&O segment. But PSU stocks, Hindustan Copper, Nalco, BAIL, all of these stocks falling by nearly 4 to 5%.
Right, Yatin, of course, there were quite a few newsmakers as well. I think your news break also, was confirmed that Ambuja Cements will be selling 2% stake in Sanghi Industries to meet the minimum public shareholding norms, right? So that was one. But on that note, let's take a look at some of the other stocks that are on our radar this afternoon. Of course, starting with ITC, the stock opened lower. Of course, there were surround sound about a stake sale by British American Tobacco, and of course, reports suggest that a stake sale to the tune of 4% could be coming as soon as this week. In fact, BAT holds somewhere around 29% stake in ITC, and it is looking to reduce it to 25%. 4% stake sale is likely to be valued at somewhere around 20,400 crore rupees. In fact, reports also suggest that BAT is in talks with Bank of America as well as Citigroup for a $2 to $3 billion stake sale. Now, of course, the stake sale the stake sale is being mulled by BAT to reduce its debt as well as to reallocate capital in a better way so that they can resume buybacks. In fact, BAT had also earlier indicated that it is aiming to reduce its stake in ITC. If you look at the recent trends, even Whirlpool, company like Whirlpool had reduced its stake in its Indian firm, given the fact that they had said that cited overvaluation as one of the reasons. Now, BAT wants to conclude this stake sale before the end of this month, given the fact that they would want to account for the proceeds in the current quarter itself. Now, analysts say that there could be a supply overhang and that could weigh in on prices of share prices of ITC, but there could also be appetite from index funds that would look at reallocating or rebalancing their portfolios ahead of the close of the financial year. But shares of ITC, of course, ever since this news came out that BAT would be looking to reduce stake, have come off quite a bit. In fact, from its all-time high, shares of ITC are down somewhere around 20 to 22%, Yatin.
Absolutely, and ITC, the stock, as you mentioned, from the record levels is down 20%. Let's see what is the appetite, at what levels does the block deal happen, because that would probably act as a support or a baseline zone when it comes to the stock moving ahead. From one hotel counter or a FMCG counter, let's talk about Zomato, which has been in the investor radar.
Zomato?
Yeah, it's Zomato is what investors usually call. I don't know if Zomato really suits the investors on Dalal Street, but the stock has done really very well. In such volatile markets, the stock has managed to stay above the 150 levels, much higher than what it was before the quarterly earnings release. Now, if you look at Zomato, we have HSBC, which has a buy call on Zomato with a target of 200. Now, they believe that obviously the food delivery business is doing well, but Blinkit also should fuel the growth moving ahead for Zomato. In fact, the advertisement revenues will remain the cornerstone of quick commerce business in the long term. Obviously, a lot of FMCG companies would like to promote their brands on Blinkit and quick commerce businesses, including restaurants also, who have to pay to list on the Zomato app on a preference basis. In fact, HSBC expects the Blinkit ad revenues to be 3% of total digital ad spends of India in the next 5 years. So, a considerable amount of market share in terms of advertisement revenues should move to platforms like Zomato, according to brokerages, and hence, HSBC today has raised the target on share price of Zomato.
Right, Zomato, their stock has been doing well, of course, given the fact that the numbers were also pretty strong, Yatin, and the street has taken heart from it. Of course, we can see that given the fact that target prices of 200 are being assigned to Zomato. But the other stock that's on my list is BSE. Yatin, the stock was down 5.5% or thereabouts in the afternoon when news came out that NSE will be reducing transaction charges in cash and equity derivative segment, right? But towards the end of the session, it managed to stage a very good recovery. It ended lower by about 1% or thereabouts. Of course, the news flow that really led to a knee-jerk reaction in the stock price was the fact that NSE will be cutting its cash and derivatives transaction charges by 1%, and this will be applicable from 1st of April. Now, the reduction in transaction charges is likely to have an impact or overall impact of 130 crore rupees per annum on overall revenues from transaction charges, right? But the main worry for BSE, which has been gaining market share in its derivative segment, which has been newly launched, right? Now, the fact that there could be a shift in volumes from BSE to NSE as trading on NSE's cash and derivative segment will become cheaper. So that is the biggest worry for BSE, which is why I think the stock saw a knee-jerk reaction in today's session. In fact, if you look at BSE, it has been rapidly gaining market share in the equity derivative segment. In September, in fact, BSE's market share had reached 7.4% versus 0 back in May. Now, analysts had predicted that BSE's share in the derivative market will hit somewhere around 10% in Q4 of FY24. Of course, on the basis of number of factors such as introduction of weekly index contracts, increasing hedging, and a growing number of active trader participation as well. Now, this growth in derivatives trading is expected to have a positive impact on cash volumes, but concerns that BSE may have to follow suit with respect to cutting transaction charges. That is one reason why I think the stock saw such a knee-jerk reaction. But to retain and grow its market share, BSE will have to perhaps come up with a game plan. But if you look at the shares of BSE, Yatin, in the last 1 year, I think 4x kind of gains we have seen on the stock price, right? But this bit of news maybe has come as a damp now.
Clearly, but you know, 1% transaction charge cut doesn't really move the levers in a big way. I think the markets, the kind of volumes which have been getting generated on BSE, NSE, more or less compensate the kind of cuts that they have taken on the transaction charge. Obviously, assuming FY25 will be a good year with PM Modi back at power for next 5 years, FY25 could be good. And the cut in transaction charges probably will be more or less compensated by the rise in volume that we could see on Indian capital markets.
Let's see how this really pans out, when it comes to, both the exchanges and how things pan out going forward. But with that, I think we've come to the end of this edition of Closing Well. Those were those were all the stocks that were on our list this afternoon. We've ended the day on a flat note. Let's see how trade pans out tomorrow morning. So come back and join us at 9 a.m. with opening bell. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.